Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://w.morningdownload.com. Subscribe. Let's dive right in. In today's episode, we'll cover the Q3 2023 earnings season, ending with positive surprises, the record credit card debt of Americans, and the possibility of a recession. Disney's earnings beat with declining ad revenue and subscriber growth for Disney+. Bitcoin's predicted price increase, tips for managing credit card debt, and the importance of willpower in investing, according to Ben Graham.
The earnings season is slowly coming to a close, and boy, do we have some interesting stats to share with you. Here's a fun fact for all you numbers enthusiasts out there. During Q3 of 2023, a whopping 82% of companies on the S&P 500 index reported a positive EPS surprise. That's right, the majority of these big players exceeded expectations when it came to their earnings per share. Talk about a confidence booster for investors. But that's not all. We've got more good news on the revenue front too. About 62% of the S&P 500 companies reported a positive revenue surprise for the same period. These guys really hit it out of the park when it came to raking in the cash. All in all, it's been a pretty stellar earnings season for most major companies. Investors, you can breathe a sigh of relief knowing that these businesses are doing well and exceeding expectations. After all, positive surprises in both earnings and revenue are music to our ears. Let's take a look at the current state of the economy and some recent news. Americans played a significant role in helping the economy bounce back after the pandemic. However, it seems like many are now facing the challenge of mounting debt and struggling to pay their bills. The numbers are quite startling. Americans collectively owe a staggering $1.08 trillion on their credit cards, which is the highest amount ever recorded. In just the previous quarter, credit card balances saw an increase of 7%, or a whopping $48 billion. With such high debt, consumers paid an all-time high of $130 billion in interest and fees in 2022. Additionally, the average minimum payment has risen to $100 a month. Unfortunately, most consumers are finding themselves without enough money to cover their bills. Many are dipping into their savings just to make ends meet. In fact, the personal saving rate has dropped to 4% in September, compared to the all-time high of 32% in April 2020. Experts have expressed concerns about the situation. Chris Watling, the founder of Longview Economics, has warned that U.S. consumers are headed for trouble. And Bill Simon, former CEO of Walmart U.S., believes that Americans should take a step back from spending, which is a departure from the norm. Relying too heavily on credit cards can spell trouble when the payments aren't made. This has been an ongoing issue for a few years now, and it seems to be exacerbating. Despite a robust labor market and increased consumer spending, some experts predict a recession in 2024 as the situation continues to worsen. On another note, there have been some global developments worth noting. In the United States, Israeli bonds worth $1 billion have been purchased since Hamas's attack. In addition, the FDA has approved Eli Lilly's tirzepatide for weight loss. Lastly, a tentative deal has been reached to prevent walkouts at half of the Vegas casinos set to strike. Disney surprised investors with better-than-expected profit in its recent earnings report. The company's earnings per share came in at 82 cents, beating the expected 70 cents per share. Similarly, Disney's revenue reached $24 billion, slightly below the expected $33 billion. However, despite this positive news, there was a decline in ad revenue that cannot be ignored. The decrease was primarily seen in Disney's ABC network and other owned TV stations, which experienced lower political advertising revenue during the quarter. As a result, there are murmurs that the company may be planning to sell off some of its TV assets. On a brighter note, Disney's streaming service, Disney+, continues to perform well. The company added 7 million new subscribers in the previous quarter, bringing its total user count to 152 million, including Hotstar. This surpassed the expected figure of 15 million subscribers. Additionally, the losses from streaming appear to be narrowing, with the company expecting to turn a profit in the fiscal fourth quarter of 2024. As a result of this positive news, Disney's stock is up 56% in pre-market trading. Investors seem to be reacting positively to the company's strong performance and the progress being made in the streaming sector. Matrixport, the trading firm founded by Bitmain co-founder Wu Jihan, has made a bold prediction about Bitcoin. They originally set their year-end price target for BTC at $45,000 in early 2023, and now they're reiterating that prediction. According to Matrixport, Bitcoin is currently facing resistance at $36,000, but it's getting ready to break through and reach the $45,000 mark. They believe that if BTC manages to break above $36,000, it could potentially reach $40,000 next, and then ultimately hit $45,000 by the end of 2023. It seems that Bitcoin is gathering some momentum as it's currently hovering just below the $36,000 mark. There has been consistent buying activity during US hours, which is supporting its current position. In fact, as an update, it has now even surpassed the $36,000 mark. Exciting times for Bitcoin enthusiasts. In terms of support and market indicators, it's worth noting that support liquidity has been decreasing, going from $34,500 to $34,000. The BTC USDT order book on Binance has also shown additional sell liquidity at $36,000 after a decline the previous day. So, there are definitely some key levels and barriers to break through. To summarize, other traders in the market have pointed out that spot bidders are needed to drive further upside for Bitcoin. So let's keep an eye on how things unfold and see if this bold prediction from Matrixport becomes a reality. So, we've all heard about the importance of personal finance, right? Well, here's the thing. Credit card debt is a huge issue. We're talking about 183 million Americans who own credit cards and rely on them a bit too much. It's like this never-ending cycle that just keeps pushing people further into debt. And with inflation on the rise, it's no wonder that the average consumer credit card balance is at a staggering $7,951, the highest it's been in a decade. That's a lot of dough. But fear not, because I've got some tips to help you get out of that credit card debt and regain control of your finances. First things first, create a debt payment strategy that works for you. There are a couple of popular options out there, like the snowball method and the debt avalanche method. Take a look and see which one suits you best. Next, consider paying more than just the minimum payment each month. If possible, set up automated payments. This will not only help you avoid those pesky late fees, but it'll also speed up the debt repayment process. Debt consolidation might be another option to consider. It involves combining all your payments into one, making it easier to manage. Just be sure to explore affordable personal loans and 0% balance transfer credit cards. Oh, and don't forget to reach out to your creditors. Some of them have hardship programs that could offer some relief if you're going through tough times like illness or unemployment. Now, in terms of lifestyle changes, it might be a good idea to ditch those credit cards altogether and opt for debit cards instead. Some of them even come with cool features like earning money on your deposits. Setting a budget is crucial too. It might be tough at first, but trust me, you'll get the hang of it. And lastly, start building up that emergency fund. Only use it when you really need it, though. Today's personal finance quote is from the legendary investor, Ben Graham. He reminds us that even the most intelligent investor will require a strong willpower to avoid going along with the crowd. In the world of finance, it's easy to be swayed by the opinions and actions of others. We often feel the pressure to follow the latest trends or make impulsive decisions based on what everyone else is doing. However, Graham's words serve as a valuable reminder to stay focused and think independently. Successful investors understand the importance of making rational decisions based on thorough research and analysis rather than blindly following the herd. It takes discipline and self-control to resist the urge to follow popular opinion and stay true to your own investment strategy. By doing so, you can avoid the pitfalls of herd mentality and stay on track towards your financial goals. So, next time you're tempted to go along with the crowd, remember Ben Graham's words and trust in your own judgment and research.
In today's episode, we covered the Q3 2023 earnings season results, Americans' increasing credit card debt, Disney's earnings report, Bitcoin price predictions, managing credit card debt effectively, and the importance of avoiding herd mentality in investing. Thanks for tuning in to the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.